So this is an extremely important video. In this video, I want to talk about the three bearish signals that I noticed in the market just 1 or 2 days before Christmas. Actually, what happened is I came in 100% cash. I decided to put my portfolio 100% in cash just 1 or 2 days before Christmas because I noticed three bearish signals which I want to talk about in this video because I think couple of my YouTube subscribers and one of my video course students requested that what did you see in the market on 23rd or 24th of December which prompted you to come completely on cash. So if you have been watching my videos, you know that I sold five stocks which I had in my portfolio. uh, Dixon, Keynes Technology, Time Technoplast, Zomato, and Polymedicure. So I sold all of these stocks around that period, around 23rd, 24th of December, just 1 or 2 days before Christmas came 100% on cash. Out of five stocks, lost money on Polymedicure and made money on the remaining four stocks, roughly around 32 to 34% return on a position size of roughly 6.25 to 10%. Okay. So the question is, what are these three bearish signals that I saw? This video is about those three bearish signals. Okay. And by the way, before I begin, uh, please notice that on each of these five stocks, I have made two videos, and each video is at least around 20 minutes to half an hour. Okay. So there are 10 videos, two videos per stock. One video is about why did I buy the stock? What are the factors that I looked at before I bought the stock? And the second video was uh, what are the factors that I saw before I sold the stock? Why did I sell the stock? So please, I request you to go back and take the time to study those videos. It is not about the time that you spend in studying those videos, it is about the notes that you take while you are studying the videos. Please take notes when you see me buying a particular stock, and please take notes when you see me talk about the factors that I look for before selling a stock. Okay. Now let us look at those three bearish signals. Number one, if you notice, Market Smith gives us the market conditions. See, if you notice here, there are four market conditions I keep discussing all the time. Now, if you see 23rd December comes somewhere here, okay, between these two. At that time, the market was trying to attempt a rally. That's a weak market condition. Then this red color is confirmed downtrend. That's a weak market condition. Then this rally attempt is a weak market condition. Now this might turn to confirm downtrend because the latest low was taken out. So from 26th of November till today, the market has been in a weak market condition. I will talk about this, don't worry. But from 23, 24 December till today is 22nd of January, 5:30 p.m. the market is closed. From 23rd December till today, I have not bought a single stock because there was nothing to buy. In my filters, I did not get a stock which was completing a base and which was liquidity wise, comparatively, technically, fundamentally strong enough for me to consider a purchase. So I did not find anything. So the system that I have created automatically kept me away from the market. That is how robust our system needs to be. It should automatically keep us away from the market. And by the way, if you notice, 23rd or 24th of December is when I completely went on 100% cash. And from that time till today, the Indian stock market has lost roughly 20 to 25 lakh crore of market capitalization. Let me repeat that. Roughly 20 lakh crore of market capitalization approximately. 1 crore is equal to 10 to the power 7. 1 lakh is equal to 10 to the power 5. So 20 multiplied by 10 to the power 12. That is the amount of money. So 20, I think 20 trillion rupees. That's the amount of money. That's the amount of value that has got eroded from the Indian stock market from 23rd December till now. It could be more. I have not measured exactly because around 12 to 15 lakh crore was lost in 3 days last week. And this week, I think first day itself, 7 lakh crore was lost. 50,000 crore is the total amount of money that the foreign institutional investors have pulled out of the Indian stock market just in the month of January from 1st to 21st. This is as per Economic Times newspaper. Okay. So in this market, does it not make sense to sit on cash? Okay, just look at the facts, just look at the numbers. The money is leaving the market. Market capitalization is getting eroded. People are losing money left, right, and center. What sense does it make to take a swing trade or a positional trade? Why not sit on cash? Okay. Coming back to this, from 3rd January to 13th, Market Smith said that the market is in a confirmed downtrend, sorry, confirmed uptrend. So I have marked it 3rd January here. And before this, from 11th June to 3rd October, Market Smith said that market is in a confirmed uptrend. So 11th June I have marked. So if you notice these two yellow lines, during 11th of June, when the uptrend started here, the question we have to ask is when Market Smith declares that the market is in a confirmed uptrend, the follow-up question should be how sustainable is that uptrend? So let's look at sustainability. Have a look at this uptrend. Okay, the Nifty is trading below the 50-day simple moving average. The 50-day simple moving average is trading above the 150-day simple moving average, and the 150 is above the 200-day simple moving average. So price blue, green, red. That is not the case here. The price is trading below. The price has closed below the 50-day simple moving average. The 50-day simple moving average is below the 150-day simple moving average. And by the way, the 50-day simple moving average is in a downward sloping trend. Here, all the three moving averages are sloping up. So just by looking at these two signals, which Market Smith has highlighted, which uptrend do you think is more sustainable? Of course, this is more sustainable, right? Because the Nifty is trading above all the three moving averages, and all the three moving averages are sloping up. So when I looked at this day, when Market Smith announced this, the moment they announced this, I immediately opened Nifty chart and I drew these two lines. Okay, and I immediately saw the big difference between this confirmed uptrend and this confirmed uptrend. This confirmed uptrend is less sustainable. This confirmed uptrend is more sustainable. This is classic stage 2 uptrend in the Nifty. Here, there is no question of stage 2 because the blue line is below the green line. Okay. So very clear it was for me that the market is weak. Okay. So this is the first signal that I saw. The Nifty itself was trading below two key moving averages, the 50-day and the 150-day. And the 50-day moving average was sloping down. Number two, the uptrend that Market Smith highlighted was not sustainable. So number one bearish signal was overall weakness in the market. That is why I came on cash on 23rd of December. Okay. Or I think 24th of December. I think there were 5 stocks I sold. Some I sold on 23, some I sold on 24. Just check. I don't remember the exact date. What I do remember is that during that Christmas period, I came out of the market. So please check those videos. It's all documented in the form of video in my YouTube channel. Okay, all the videos are there. You can go back and check. In fact, on Dixon, I must have made at least 4 videos. Because for me, every trade is like a story. And I want to narrate that story to you as price progresses, as time progresses. I want to narrate that story to you. Okay. So first bearish signal is weakness in the market. Second bearish signal. Okay. Weakness in leading stocks. Let's say, for example, you have 5 or 6 stocks in your portfolio. Generally, normally or naturally, what happens is since the market is volatile, one of your stocks will be up, another one of your stock will be down, the third stock will be up, the fourth stock will be down, and so on. So there will be fluctuation, there will be volatility, one will be up, one will be down. That is normal, natural. However, when all of your stocks come down at once, you know that there is a problem. And When I bought all those five stocks were leading stocks. Leading stocks means comparatively, technically, fundamentally strong. There was a problem with Zomato and Polymedicure because I overlooked the base count. Both were late stage bases, and I still uh, ended up buying the stock. That was my mistake. That was my error. But overall, if you see, all the five stocks were comparatively, technically, and fundamentally strong. So they were leading stocks. Leading stocks always lead the market. Let me repeat that. Leading stocks always lead the market, which means what? When leading stocks come down together, it is generally a sign that the general stock market will come down as well after that point. Okay. On the other hand, vice versa, when leading stocks begin to go up from the market bottom, the market is trying to form a bottom, and leading stocks have already started going up. Since leading stocks lead the market, when you see a lot of stocks breaking out of their bases, that means the general market is also about to turn. So Mark Minervini's most important lesson in his book is leading stocks always lead the market. So all of the stocks that I had bought, the five, they were leading stocks. And on 23rd, 24th December, all five were down. Okay. That was a clear bearish sign that there is something wrong in the overall stock market. It is time to come in cash. Okay. So when that happens, weak market conditions plus weakness in leading stocks, when these two events happen simultaneously, what you are supposed to look for is specific technical sell signals. Let me repeat that. You have to start looking for specific technical sell signals. So, for example, I sold Zomato not because the market was weak. I sold Zomato because there was a falling window in Zomato. So, for example, you see, I sold Zomato because of the falling window between these two candles. Okay, after it broke out, it created a falling window. A stage two uptrending stock is not supposed to create a falling window. Okay, so that's a specific technical sell signal which I saw. The selling decision was not based on feeling or hunch or some sixth sense or some gut feeling or something like that. That sell decision was based on a technical sell sign, which is a falling window. So my sell price was 292. Dixon, Dixon, the story was different. In Dixon, I sold the stock not because there is a falling window, but because there is a closure of the rising window. You see, there is a rising window here. That rising window was broken by this red candle. So you understand, these are two different events. One is the appearance of a falling window, bearish sign, and second is the closure of the rising window, another bearish sign. Okay. So in each of these stocks, I started looking for technical sell signals that appear, which will allow me to come and sit on cash. So I exited all of these five stocks based on some technical signals, which I have discussed in those videos. So this is the second bearish signal. Okay. A weakness in leading stocks occurring simultaneously in the market in a period of 1 or 2 days. Okay. The third signal, this is very simple. If you notice, when you use a filter in MarketSmith, so let's say I have used this filter. Okay, you use any filter. I have an entire playlist on how to create filters in MarketSmith. You can watch that playlist. But let's say I have this filter. See how many stocks are coming in this filter. 18 stocks. You know what? 3 weeks ago, that number was 95. 2 weeks ago, that number was 43, 43, 45. 1 week ago, that number was around 27 to 29. Now it is 18. So in less than a month, that number has gone from 95 to 18. What does that mean? What does that weekly trend indicate to you? There is weakness in the market. The number of stocks that show up in my filter are reducing, which means what? The market is getting weaker and weaker. On the other hand, I have noticed that in a confirmed uptrend, the number of stocks that show up in your filter, okay, they keep on increasing week after week. They might go from 18 to 95. It doesn't happen over a period of 5 to 6 months. It happens very quickly. Sometimes in a week you might see this number doubling. Okay, it happens in a confirmed uptrend. That's a sign of a very, very healthy stock market. But here that count was reducing. And but for this technique to work, you should not be changing the filtering parameters, the criteria. The criteria should always remain the same. Okay. So that you can see so that for every week you are consistently using the same criteria and you are just counting how many stocks are coming in that criteria. If the number is declining, there is a problem in the market. It's a like a hidden signal that there is something wrong in the market. Otherwise, why would that number reduce? A lot of stocks should be forming a base in a healthy stage two uptrending stock market, right? But once that number begins to reduce, that's a that's a problem. Probably that number kept on reducing because stocks began to close below the 50-day simple moving average. One of the filters that I use is the price should be trading above the 50-day simple moving average. And this comes straight from Mark Minervini's trend template from his books. It's not some rocket science that I'm using. It's not some original idea that I have. I only trade stocks which are above the 50-day simple moving average. It is as simple as that. So when stocks start to break that 50-day, suddenly this number starts to collapse. From 95, it comes to 18 in less than 3-4 weeks. Okay, that's a clear signal. So let me summarize. Number one, weakness in overall market conditions as indicated by MarketSmith. Number two, weakness in leading stocks. Leading stocks lead the market. Number three, bearish signal. The number of stocks that show up in my filter started to reduce. These are the three signs that I saw which prompted me to come on cash. Okay. By 23, 2024, sorry, by 23, 24 December, that number was a good number, but I saw that number was reducing day by day. Okay. It had not come down to 18, but daily I started noticing that stocks have started to break their 50-day simple moving average and that number was reducing. So you could track that number weekly, you could track that number daily. I do it daily. Okay, because that gives me a kind of an intuitive feel of the market. The number of stocks that come here, that gives me a feel of the market. So three bearish signs. Number one, weakness in market conditions. Weakness in number two, weakness in leading stocks. Number three, reduction in number of stocks coming up in your filter. One more point I wanted to discuss before I close the video, the importance of selling. In Mark Minervini's book, he says that no matter how great a stock is fundamentally, no matter how great a stock is fundamentally, unless it creates a VCP, he will not take the trade, which means he is giving more priority to technical than fundamental. Okay. That is exactly what I did when I came out of those five stocks. I gave more priority to technicals than fundamentals. Okay. So let's have a look at those stocks. So Dixon I sold simply because there was a closure of the rising window. It's a very clear sell signal. Of closure of a rising window is a clear technical sell sign. And my selling price is 17876.40, the pink line. Look what happened after I sold the stock. The stock is down from here to the ultimate low. The stock is down 20%. Okay. This is the importance of looking for specific technical sell signals in spite of the fact that your stock is fundamentally very strong. The latest quarter EPS growth, by the way, is 261% as of when I bought the stock. Okay. So, irrespective of whether the stock is strong, fundamentally strong or not, in a weak market, if you are getting such bearish signals, it is always better to get out. Otherwise, you will lose another 20%. Look at that chart. Okay. Next, Zomato. Why did I sell Zomato? Appearance of a falling window. See, there is a falling window between these two candles. My selling price is 292.25. If I had not sold here, I would have lost. Check from here till the low, ultimate low. I would have lost 30%. Dixon went down 20% after I sold. Zomato went down 30% after I sold. You want to look at Keynes? Keynes was sold because of weak market conditions. See the pink line. This is my selling price. I sold it on this day. From pink line till now, look how much the stock has collapsed, 26%. 26% the stock is down after I sold the stock. This is the importance of selling. This is the importance of looking for technical sell signs. This is the importance of paying attention to market conditions as displayed by MarketSmith. I see. I always talk about MarketSmith. I am a regular customer. I don't promote MarketSmith, by the way. I don't have any association with MarketSmith, official, unofficial. But I tell you, the signals given by MarketSmith are extremely powerful. The signal, in a sense, the market conditions. I am not talking about the stock recommendations. I am talking about their analysis of the market is extremely good. And the market conditions that you see, that is not based on opinion, that is based on 100 years of stock market research data. Okay. So those values, market conditions get updated automatically. There is no human involvement in that. Okay. So Zomato crashed 20%, Keynes crashed 26%, uh, Dixon, I think, crashed another 20-30%, right? After I sold. Notice Time Techno. Time Techno, I got out at break even. So pink line 468.10. See, notice I mark all these lines, okay, just to keep a track, just to have a record. See, this is down 15%. So on an average, if you see, each of the stock that I have sold is down 15 to 20% or more from the price that I have sold. Okay, this is the importance of selling. What else is remaining? Polymedicure. See, Polymedicure, my stop loss was hit. So this is my selling price. So from here, Polymedicure is down 17%. And by the way, there was one stock on which I did not make a video, which I rejected, which was NewGen. A lot of students and my subscribers were asking me about NewGen. Why did I reject the stock? Because simply because it was a late stage stock, I think base 4 or base 5. I rejected the stock. Look what happened. Look at NewGen. Complete collapse. There was, see, a lot of people told me, Rohit, why didn't you take this breakout? Well, even if I had taken that breakout, I would have lost money. This is a late stage base. Check MarketSmith. NewGen, I think, is base number 4 or base number 5. I am not going there. Another stock that people were talking about is NetWeb Technologies. Now, that stock doesn't come into my liquidity analysis, doesn't fit my liquidity analysis criteria because the number of shares traded for the stock, I think, is less than 200,000 shares. So it never came in my list. Yeah, it has increased now, but I think before that it was less than 200,000 shares. So that stock never came in my radar. Earlier it had low volume, okay, less than 200,000 shares. Look what has happened to the stock. It's a complete collapse. Okay, I don't want to trade in illiquid stocks. Any stock where the average daily volume traded is less than 200,000 shares, I'm not interested. I am not saying don't buy. I am saying that you can buy, but you should be aware of the risk that you are taking. If you are going below 200,000 shares, you are taking additional risk. Okay. So these are a couple of stocks that I wanted to show along with the five stocks that I sold before Christmas. Okay. Last point before I close the video. Remember, technical is more important than fundamental. Have a look at Dixon. Dixon recently reported. Where is Dixon? Let me refresh this. So, yeah, Dixon Technologies. Okay. You see how crazy this is. Dixon has reported latest quarter EPS growth of 122%. The stock has doubled its earnings. The stock has more than doubled its earnings. Investors, traders should be happy. Look what has happened to the stock. You talk about fundamentals and reading the balance sheet and attending AGM and things like that. But the reality is very different. The stock collapsed 13.75% in a single day. I think this was on the day the earnings were announced. Can you guess why this happened? Look at the September quarter earnings growth, 261%. This means investors were expecting 261% or more EPS growth in December 2024. So the stock, even though it has doubled its earnings growth rate, even though it has doubled its earnings or more than doubled its earnings, still the stock collapses because it doesn't meet the expectations of the investors or traders. So this is a game of expectations. It is not about fundamentals. Fundamentally, I don't think there is anything wrong, right? If a company is doubling its earnings in 1 year, so this is annual rate, although it shows quarterly, but this is annual rate from December to December. That's a healthy growth rate. I mean, what more can you ask for from a stock, right? 100% growth in EPS. But no, investors want more. So if the expectations are not met, the stock will get punished. Okay. I think something similar happened to Zomato. I don't know whether they've reported the earnings or not. I haven't checked. Yeah, have a look at this. I mean, this is very obvious. From 400%, if you collapse to minus 56%, obviously the stock is going to get punished, right? Look, complete collapse. In a single day, the stock collapsed 11%. Can you see the direct correlation between earnings and the stock price action? And by the way, couple of weeks ago, I made a video on Asian Paints. Asian Paints gave a sell signal in October 2021. Why is not showing here? So I want to explain to you the importance of technical sell signals. Okay. See, in if I expand this is Asian Paints, by the way, consolidated. In September 2021, suddenly the EPS growth collapsed from 160% to minus 28%. So September quarter earnings generally will get reported in October 2021, right? So in October 2021, you should have sold the stock, right? Go to Asian Paints. Let's go to October 2021. See, October, yeah, this say second week of October, because it might take maybe couple of weeks for the earnings to get announced, maybe 3 weeks. So somewhere here, 18th October, 12th October, somewhere in this area, let me highlight that. This particular area, so that's a price of around roughly 3,300. That's a clear sell signal. And people think of Asian Paints as a heritage holding. I mean, it's like an ancestral holding. It's like you bought some. It's like you bought a house. People are not willing to sell here. It was still trading above the 50-day simple moving average. That was a good time to sell, in spite of the fact that negative EPS growth was reported. People sat on the stock for 3 years. The stock did not do anything, and finally it collapsed. Why do you think this stock collapsed here? Look at the EPS growth, minus 25, minus 42. What do you expect? You expect the stock to go up? It's not going to happen, right? So imagine a stock like Dixon, which reports triple digit growth in earnings. If that can collapse 14%, imagine what can happen to stocks like airline companies, and where they're negative sales growth, single digit sales growth, negative EPS growth, single digit EPS growth, right? Imagine what will happen to those stocks. Okay, I have no prayer for those traders or investors who still hang on to a stock where you can clearly see that latest quarter sales growth is continuously negative quarter on quarter. Why take that much risk? There are 5,200 stocks in the Indian stock market. Why not stick to those stocks where there is growth in the EPS, right? Anyways, this video is becoming very longer. The point I'm trying to make is technical comes before fundamentals. Even in my orange trading framework, technical element comes first before the fundamentals. Okay. Price itself is an indicator. Okay. People think that based on price, you can create indicators like MACD, stochastic moving averages. No, these are indicators. But before that, my argument is price itself is an indicator. The price tells you what is likely to happen in the general market going forward. Okay. So these were the signs that I noticed before coming on cash 100%, and I will continue to remain on cash as long as the market conditions remain weak. But wait, the market conditions can rebound anytime. It takes only three closes above the latest low for a rally attempt to begin. And after the three closes, fourth, fifth, sixth, and seventh day, if one candle is more than 1.5% above the previous day close in the Nifty with high volume from the previous session, not necessarily above average volume, that's a confirmed uptrend. And we need to be ready for that. At that point, the the Nifty could be below all the three moving averages, but that's a signal that the rally could begin again in the Nifty, and we need to start looking for what? We need to start looking for leading stocks, whether they are forming a base or not. If the 1.5% candle in Nifty coincides with base formations in leading stocks, that rally is most likely to be sustainable in spite of the fact that the Nifty is trading below all the three moving averages. So that's my little lecture. I feel tired now. So I will have some water, and I will see you in the next video. I hope this video has helped you. Thank you so much. If you have some comments, feedback, please let me know so that it will give me ideas to create more valuable videos like this. Thank you so much.